Martingale trading, please don't do it. Hi, it's Charlie giving Saturday's video. Yet again, I've heard a couple of stories this week of people using martingale techniques and blowing up their accounts. You really shouldn't do it. It's not a load of rubbish. You can do it, but you really have to have a hard stop loss. If you do it with no hard stop loss, you are destined to lose money. And I'll take up anyone who contests this. I really will. I've been around for a long time in the markets, and everyone who ever martingales who doesn't use a hard stop ends up blowing up an account. So let me give you some examples. So I was talking to a trader friend of mine this week who knows someone who'd got a martingale technique system. Now, martingale, just so I can explain what this is a martingale technique is when it's like a mean reversion type technique. So let's say you've got a trend here, and at some point it starts pulling back, and then you start buying. If it comes down lower, you buy more, and if you come down lower again, you buy more, and so on and so forth, with no stop loss. Traditionally, you don't use stop losses with it. And a lot of the time, because as price comes down, you're adding into your position, a lot of the time the market will bounce, and then you'll get out of your position with some form of profit. And you can be right a heck of a lot of the time by doing this sort of thing. But what's the point in being right a lot of the time if ultimately you're going to blow up? So why is that? If you could be right 90% or so of the time, because it only takes that one time, 1x, where the market doesn't bounce. It doesn't do this. It just keeps going and going and going until you keep on adding and adding, and then very quickly you've blown up. That's it. You've hit your margin, or certainly you've hit your margin levels, and you get a margin call and you're out. That's it. And all you're left with is the remainders of your account. So please don't do it. I've had two stories just this week again told to me. One story was a trader who had been making money for 4 years using this technique. Not a stupid person. Bright, intelligent people do this sort of stuff, and had created a load of rules, and had been making money for 4 years and really good returns for 4 years, then blew up in September when cable, the pound dollar, had a black swan event, which is sort of what it did, where it just absolutely plunged here to the tune of 1,000 pips in such a short space, and it had already been adding in, the system had already been adding in way before that, and it just hit his margin. So what's the point in making money for 4 years if you lose it all in the end? What is the point? I urge you to go and read the book The Hour Between Dog and Wolf by John Coates, or Steve Coates. Coates anyway is his surname. Go and read that book. They did a lot of testing on all sorts of things that traders get up to. What's the point in making money for 4 years or a year or 2 years or 3 years, whatever it is, if ultimately it's going to blow up? So that was one trader I got told about this week, and then another trader I got told about who was in CAD yen recently. I think it was CAD yen. Again, similar sort of thing, buying as it's coming down, and now stuck and in loads of open losses. No one I know, just I got told this story about this person, and I looked at the chart and thought, oh God, and this is what goes on. Because why? Because people inherently, traders want to be right as much as they can. They want to have high win rates. They want to be proven right. So this is the sort of technique where a lot of the time you will be right. If you can hold on to when it goes underwater against you, then ultimately a lot of the time price will pull back. You're adding through that, and then it will then come back up. But what's the point if it happens a lot of the time, but now and again we get these as I say, black swan events that come along? Let's just take the dollar yen as an example. Now the dollar yen this year has had these amazing runs, And anyone using martingale techniques this year, or most people, because I've heard about, again, traders earlier this year, where even when we had this run up here, were blowing up using martingale, adding in, shorting, and then adding in, and then the market just didn't pull back. Please don't do it. I urge you. I don't even care if you think that you've got a little method that makes you money, because unless you've been doing that for 20 years, then I don't believe that it will work for you going forwards, and it's only a matter of time before the market comes to bite you. Please, 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 I urge you. I see all this sort of stuff going on all of the time. It's a recipe for disaster. Forget about being right all the time. Start thinking about, managing your money in the right way, and not necessarily always having to have a super high win rate. And if you can go down that path, you'll be better served in the long run. There you go. That's my advice for this weekend. Have a wonderful weekend. I'll see you next week.